All right, recording is underway. Happy Monday again, traders. Welcome to the Weekly Outlook. This is Chris Pulver here. Let's talk about all things stocks, forex, cryptos. Good morning, Chris. Good morning, Wayne. Good morning, Gary. Good morning, Ed. What's happening? Good morning out there on YouTube and Facebook and Twitch and Twitter and LinkedIn. Happy Monday, everybody. It is April 5th. Just reading up on where we're at from last week. The Dow Jones finished basically flat, small gains, 0.24% to the upside. S&P 1.14% and the NASDAQ 2.6%. Again, that was for the week. Bitcoin making a surge up to 59,000 plus. We're at 13% and a quarter on the week for Bitcoin. We'll take a look at that today. Job report on Friday. We had Wall Street closed on Friday. Let me go ahead and we'll get into charts, talk about the jobs report from last week. Futures has been positive this morning. I'm going to take a quick look at my dashboard. So we have the Dow Jones futures up 0.75%. We have the S&P futures up 0.7% and the NASDAQ futures up 0.85%. So big surges in futures this morning. More than likely that positive upbeat jobs report, even though we had a less than stellar average earnings. We had on par or as expected unemployment rate, which was 6%. And then we had an upbeat jobs number, which I believe they forecasted like 665, came in over 900K. So the way the market's going to take that is let's go, risk on, and we'll see if we push some new highs, which wouldn't surprise me today at today's open at 9:30. All right. I'm going to go into the charts here. We understand there's risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. Anything I'm talking about, whether you're watching me live or you're watching this in a video or recording or anything on my Keep Your Seriously Simple video series or whatever I'm doing, all this is for educational purposes only. Okay. All right. Morning, David. How are you? Morning, Joe. If you're following me out there on social media, youtube.com/Chris Pulver, best way and fastest way to follow me right there. Leave me a comment. I'm posting a lot of links to articles, to videos. I'm referencing things inside these sessions, so take a look at those descriptions after the video posts, and you can get some more information there. Anything I reference, like my portfolio backtester, my portfolio architect. Last week I provided a webinar for Equities On Demand, which I'm actually going live today at 10 a.m. And I'll post the same thing. So I'm recording today's session. I will post a link for Equities On Demand. I'll post a webinar if you just want to watch it, learn more about it. If anybody would like to join, I'll put a direct link in there as well. Like I said, we're streaming on multiple platforms. You can check this out on Facebook. If you want to follow me on Instagram at pulver.chris, send me a direct message. You can absolutely do that. Best way is to just watch me on YouTube, comment, and I typically respond to 99% of those comments unless they're spam. So don't spam me. All right, but they're usually those don't post anyway. Okay. Trading indicators A to Z. I need to get another video added this week. It's been busy. Equities On Demand has taken up an extra 5 to 6 hours of my week in addition to my trading room. So anyway, I'll find the time. I'll make the time between Keep It Seriously Simple. I'm trying to finish up a robot video in optimizing robot strategies, a trading indicators one. I want to do the awesome oscillator and the average trading range. I'm going to try to knock both of those out this week. Which is not terribly difficult. They should be like 5 to 10 minute videos max. But I want to make sure I do the proper homework and give you some good information on how those indicators work. Keep It Seriously video series. We're on lesson 16, I believe. Again, all of them are timeless lessons. Take a look at them. Support, resistance, trend lines, trade size, margin, adding to winning trades, managing drawdowns, managing profits, all sorts of subjects there. Check out those lessons. Also, like I said, today we officially go live Equities On Demand at 10 a.m. Eastern Time. Myself and Tyson Clayton looking forward to it. We've got a busy week ahead. We already have 8 alerts for some day trading opportunities that we'll talk about, and we have 5 weekly alerts. So we're looking for some weekly plays as well as some day trading opportunities. So it's going to be a busy day. It's certainly going to be an active and busy session starting at 10 a.m. So hopefully all of you are able to join or will be joining, or if you want more information, like I said, in this recording, I'll post a link to the webinar we did last week. We did 20 of them, but there's a couple that were really, really good. And I'm really looking forward to this class and this service, and we're looking forward to having not just myself and Tyson, but anyone that's following. We're looking forward to making some really nice profits. All right, good deal. All right, good morning, Denise. How are you? Good morning, Philip. Gert's in the house. Hammond, how are you? Yep, all good, all good. Catherine, good morning. Okay, let's get into the charts. So I actually have to open up my charts. I had them down on another screen. Let me open them up right here. Take a look. So it is 9:06. So this is all pre-market stuff today. Let's take a look and see where we're at. The SPY, actually, let me open up some of these indices. So the SPY, again, futures pointed to the upside. We have the SPY looking for a $3, almost a $3 pre-market open with a new, by the way, it is April. So we officially closed out Q1, and we are at new highs on the SPY, and we're looking for an open that is higher. So, you know that saying, selling may go away. It's going to be interesting to see, does April, again, we had a series of gaps last week. We're going to take a look at a smaller time frame, looking for another large gap to the upside. I mean, we're just shy of a 1% gap based on today's price action. So if we go down to let's go 15-minute chart, you can see pretty clearly some of these gaps from last week that were not filled. So as the volatility index has been making some new lows, we had a gap here. This would have been, I believe, Tuesday. Tuesday last week. We reviewed on Friday. Tuesday last week was the only real, it fit my criteria for trading gaps on the SPY or the DIA or the QQQ. If I'm trading those ETFs, I look to trade those almost every single day if I can. And only one day last week fit the parameters because it came back to give me an opportunity to buy. We have a gap in here that still is unfilled. We have a gap in here that's unfilled. Based on today's pre-open or pre-market, we're at 403.27. That is way up here. Again, that is a noticeable gap. Okay, now I don't want to fight it. Okay, I'm actually with the upbeat jobs report, upbeat sentiment, I'd be looking for something like this. If we gap higher and we find a way to try to attempt to fill the gap and we hold bullish, look for a buying opportunity at that gap to get filled. If it is going to gap open and still go higher, obviously you can still participate, but you'd want to be, again, cautious of the filling the gap. All right, so I don't like to do this. I don't like to buy a high. I don't like to buy a gap open, even if it sits here for indecision. If you want to take a breakout trade, I want that stop to be pretty tight. I don't want that stop to be at the gap. I don't want to cost average in. And the reason why is because we have multiple gaps now to the upside. We might see this market drop very quickly over a couple of days to fill multiple gaps. We are at historical highs. We are overbought. We know that. We know technically the market's overbought. Okay, doesn't mean that it can't dip. Doesn't mean we can't see a 1 to 3% correction in order to get those dips to be bought again. But if we gap higher, okay, a couple ways to trade it. We gap higher, we come back down with price, we look for a bounce off of this gap, and then we buy it again. Okay, the other option is if it gaps higher and it pauses here, you look for some continuation with a tighter stop loss and see if you can get the, maybe 0.5% on the day, 1% on the day. But keep in mind that this is already moved. We're already near a 0.75 of 1% before the market's even opened. So just holding anything is still up 0.75 of 1%. So anything higher than that, maybe it stretches to 1% on the day if it goes any higher. Okay, so I want to see price action cooperate for that type of trade. Same thing on the Dow Jones. Okay, Dow Jones, look at this. 331 was the close on Friday. We're at 333.95. So a $2.50 gap. Again, just shy of 1%. $2.50 divided by 331.43. We're at a 0.75% gap open. So let's take a look at the higher time frame. The Dow Jones is not at new highs. Okay, is not at new highs. Let me make sure I'm catching up on the market here. Okay, good. So Aggie, good morning. Trish, what's happening? How are you, Trish? Nice to see you. Hopefully you and Lloyd are doing well. Dow Jones looking to gap higher. If we do gap higher, which we probably will in the next 20 minutes or so, the DIA will be at a new high. So we'll actually take out those recent highs from mid-March, and we can take a look at the DJI as well. That's the 33,000 plus Dow. I don't see a pre-market here, but the DIA, you can see that we're looking to close higher. Okay, so if we gap higher, we close higher. Dow Jones is looking to stretch to new highs. The S&P 500 looking to gap and stretch to new highs. The NASDAQ, okay, again, take a look at some of this price. Gapping higher at 327. That is a $2.60 gap. Let's take a look at that one. $2.60 divided by 321.33. We're looking at about a 0.8% gap on the Qs. So these are levels that I've been talking about for a while. If the NASDAQ or the QQQ can take out this recent resistance, and if it closes today higher, we're looking for the Qs to continue to churn up towards those highs back in February. Right? So this is going to be a really important week. I know it's Q2. Pre-summer pre-summer pushing, trending, all sorts of stuff is likely going to play out. We'll take a look at Forex strength in a minute. But this area, if we break and close above these highs, I would look at some tight stops, Qs looking to extend their gains to get back to some of these levels. Dow extending its gains, S&P extending its gains. We could see a very risk-on type April. So again, I don't want to fight it. I'd rather be a buyer. If you have any opportunities to buy dips, buy lows, buy gaps lower, that's a good opportunity. Okay? So if you're using stock screeners out there, I know that Tyson and I will be doing that in the Equities On Demand. We're looking for some of those day trading opportunities. If we see gaps lower, then we'll have opportunities to trade for the day. If we don't, and that's the hard part, is sometimes they will push lower the previous day, and then that previous day is closing where we kind of want to buy it, and then the next day gaps above or gaps higher because the market's ready to buy it. And again, it kind of takes its notes from what are the indices doing, what are pre-market doing, what are futures doing, and a lot of that post-market move, pre-market move can be taking away some of those fills. So for example, I think we have 8 trade alerts and Equities On Demand for looking for day trading. Of those 8, we'll take a look at all of them during our Equities On Demand class at 10 o'clock, and we might have 1 or 2 of them that actually fit the criteria to take the trade. And maybe you're guessing, or maybe you're asking, why not take all of them? Well, I mean, we're trying to make our system and strategies pretty rule-based, and so we don't want to buy a gap open. If we have a gap open and it pulls back, then maybe we can talk about that. But ideally, it's give us the signal we want to trade, gap lower, even if it's by like 1 penny, that's fine. Any gap lower, and we look to take that trade back up into some range levels. Okay, so long story short, SPY, Dow Jones, NASDAQ looking to extend their gains. Pre-market all looking bullish. Futures is up. Jobs report from last week. I'll go to the FOREX factory here. You can find this a lot of places, but you probably saw it on major headlines from last week. I will go to last week, Friday. Again, most of the world was closed, but the U.S. decided to still have news. 916,000 jobs forecasted 652. So we came in, about 260 higher? Okay, 260K higher than expected. Our unemployment rate stayed the same at 6%. We did have a miss. So it's kind of it was an interesting mix because we had an upbeat revision. So we revised our last month's average earnings from 0.2% to 0.3%, but we missed on this month. Or I should say we missed in March, right? But we had an upbeat revision in jobs numbers from 379 to 468. We blew out expectations there by 260K. We had an upbeat revision for our average earnings. So for the most part, it was interpreted as, hey, this is good. I guess vaccine-wise, if you want to get a COVID vaccine, and that may be another reason the markets are just churning higher, is we're getting back to normal. I'm putting that loosely, but we're getting back to normal. I actually have my round 1 vaccine scheduled on Thursday. So, and that's, in my demographic, I was assuming I'd be one of the last groups to do it, and they're available. I'm driving an hour to go get it, but I don't care. So hopefully if you're out there and you want a vaccine, you can get it. If that's something that the markets are taking into consideration as moving into a new normal, whether we go from working from home or transitioning to a hybrid workforce, that's fine, but jobs are coming back. That's a good thing. I am curious. I want to do a little bit more research this week on where they're coming. 916,000 jobs just doesn't come out of thin air. Remember, we still were upside down like 8 or 9 million jobs from last year that did not come back. So adding jobs, they could be in sectors that were still beat last year. They could be back in airlines. It could be back in hospitality, tourism, service, restaurants. All the sectors and businesses that were hurt very, very badly last year could start to, see some upticks in business and maybe go back to, hiring to return to normal. So I want to do some more research on where those jobs are going and where they're coming from. Let's take a look at some cryptocurrencies. And I'm going to try to keep today's session around 30 minutes or so. Cryptocurrencies, let's go Bitcoin. We are at 57992. Again, cryptos trade 24 hours a day, all 7 days a week. So there's no pre or post market on cryptos. We're just off the highs. I've been talking about these highs and lows for the last couple of weeks. Set a chart alarm at the high, set a chart alarm at the low. Okay, sing that Walk the Dinosaur song that we joked about a couple weeks ago. All right, but the high at 61,980 and the low at 50591. Okay, so can Bitcoin tap the highs with some risk appetite this week? It's possible. Are we going to correct and hit the lows? We are starting right at, you can see here, we have a monthly pivot available on Bitcoin. So question, Will we, you can see that we started right at the monthly pivot there. We hit this monthly pivot as well. So will we, either go up to new highs and pull back to find the monthly pivot that could also keep this structure intact, okay? Or will we use this monthly pivot to start off, find some support, and then actually work our way up to new highs? But either way, I'd be looking for opportunities off of this support. As long as it holds, as long as this structure holds with higher lows, that's a good sign moving forward for these cryptocurrencies. Let's take a look at some other ones, some other majors. Ethereum breaking some new highs, 2065. That's a pretty promising move. Interesting. Ethereum making a run higher, and it is not relying on Bitcoin to make new highs. So we're at 2065. And if we go back to our 2018 highs, this is kind of exciting. Our highs in 2018 were 1,400. Ethereum, again, I know it's overstretched. I know it's overbought. Maybe this is the divergence that we've been noticing, right? You notice here, if I stretch my price, okay, we make a new high in price. We are disagreeing, okay? We are not overbought, however, so there could be some upward movements to still get the relative strength index in this area, before we actually start to see some type of correction. So perhaps it can stretch a little bit further into this, 70 plus to 80 zone on the relative strength. We can still see some disagreement on momentum. All right, so let's keep an eye on this one. Also, where would a realistic pullback be? If we had 2018 highs at 1,400, could Ethereum, if we're going to have a corrective phase, watch this structure, okay? If we start moving a little bit higher, connect the dots, maybe it hits 2,500 before we have a correction back down. Okay, if we have a pullback, if we pull back into 1,400, that is 2018 resistance that can act as support. So if we have some interested buyers, originally this year I was thinking about adding anything around $1,000, anything around $1,000 or sub $1,000 on Ethereum, looking to buy more. I still have some USD cash in that digital wallet that I'm looking to add to some of these cryptos. As I took some profit, at 2,000 plus on Ethereum, partial profit. I took profit at 60K on Bitcoin, partial profit. I'm looking to add more. Okay, I've put in some funds to some altcoins, and hopefully those will continue to play out as well. If the majors keep climbing, hopefully the alts will do the same thing. Okay, Litecoin. Litecoin has not broken the recent highs. Recent highs at 247, recent lows at 160. So just waiting for a chart alarm to get triggered on Litecoin. Let's check Ripple and Stellar Lumens. Ripple making a little sneaky run there to 72 cents. Okay, all right, Ripple, I see what you're doing. I like that. I don't mind that. Now, question is on Ripple, are we going to hit this resistance and reject? Okay, are we going to have some range levels where 75 cents is the hardest level to break right now? Or will we actually see a weekly? If we can get a daily close above this or a weekly close above 75 cents, maybe we can see this little run on Ripple, right? Maybe. But let's keep an eye on that 70 to 75 cent zone on Ripple. Stellar Lumen, it's at 46 cents again, creeping up towards highs. New high has not been broken. Recent lows have not been touched. So look for those highs to get tested. I am in BAT USD as well. Basic attention token, highs at $1.45. Hasn't hit it yet, but chart alarm set at recent highs and lows. Link, another one, just checking it out, $31.16. Chart alarm at the high and low have not been hit. So just keeping an eye on them. Okay, EOS. Okay, good morning, Ladine. How are you? EOS USD. So EOS. Oh, now we're talking $6.12 on EOS. Love it. I'm in here around $3.20. So let's go. 2019 yearly pivot at $9 and change. And if we go back even further, again, I'm really interested in a lot of these 2018 highs. This is around $22. So in at $3. Would love to see this go to, $21 and change. This might be one, I don't know if I'm going to hang on to EOS forever. It might be one that if we get up to this 2018 high, maybe again, I collect some of those partial profits. That would be about a 700% return. Certainly not going to complain at that. See if it's worth it. So keep an eye on it, but we're just getting started. I like the structure that's breaking new highs. That's pretty exciting. If we're taking a look, I'm curious if this is, so recently, this isn't today. Today it's down 2.69%. But this would have been last week, right? If you look at some indecision here the last couple of days, we must have had a big surge in the last week. Yep, last week's candle's right there. So last week's candle from right around $4 all the way up to $6 and change. That's an awesome move. That's crazy. I mean, that's like a 50% move on one coin for the week. That's big. That's big. Okay, morning, Frank. How are you? All right, that gets us through a lot of these cryptos. Let's talk about some currencies. First, let me go into my currency strength chart. Let's see what's cooking this morning. So volatility-wise, it's still pretty quiet. Nothing on the high side, low side that I'm really, super interested in. You can see the dollar. Okay, dollar pretty soft for the morning. Our euro has come back into the baseline. The Swiss has come back into baseline aggressively. The New Zealand dollar has sunk a little bit. So I'm interested. I did notice that I got filled on a Euro New Zealand pullback trade. I see that the Euro's rising and the New Zealand is falling. So hopefully that pullback is doing well. I actually need to log into one of my platforms here and check and see how they're doing. But we have dollar weakness so far this morning, which maybe that's a sign of this risk appetite with the stock market gapping higher. Euro and Swiss coming back to baseline, and the New Zealand as well. Still vertically not a ton of volatility overall, but we'll be monitoring this closely all week. I still like a lot of the same trades. Positions I'm really liking to highlight this week for anyone interested in some currency trading. I am still liking dollar CAD long. I'm liking dollar Swiss long. This is going to be after pullback. I'm also liking Euro CAD long a lot. CAD Swiss short. CAD Yen short. Aussie Yen, I'm still holding short. I don't necessarily, I mean, again, I'm going to watch it, but I'm going to keep an eye on it because we could have risk on. We could see this drifting higher. Maybe the JPY doesn't have as much activity as we want to see. So I'm still holding Aussie Yen short, being patient, holding it with small positions for right now. Haven't added anything to it. But as far as positions I really like, that's 1, 2, 3, 4, 5. Those are my top 5 right there. Dollar CAD, I'm still going to stay long and hold it. Dollar Swiss, if we get any pullbacks towards 9,200, I'm looking to buy more. Euro CAD, anything at 1.50, 1.51. I've been leveling myself in since those areas, buying it at 149, 148. I'm looking to stay long. CAD Swiss, we took a short last week in my trading room around 74.80, I believe, was the high from last week. It's currently at 74.94. So we're just upside down like 10, 14 pips and looking for a high probability move back into like 73.50, 73.60 area. CAD Yen. Again, I took a trade last week at the highs. I love the alignments. I love the technicals. I'm upside down about 14 pips, but I have about 160 pips to work with, if not more. This is a 4-hour chart. 150 pips minimum and about 190 for kind of my ideal level. So I should be gaining somewhere around like 100 pips on CAD Yen. CAD Swiss probably somewhere between 60 to 80 pips as well. That would be, I have 140 pips to work with right now based on some of my bar counts. We talk about this in my trading room, my right trader reversion. Those are great trade alignments. And Aussie Yen still sideways. So, again, part of this, I'm putting this all together with low volatility here. We're just kind of making some sense of what the Euro and New Zealand are doing. The Euro Aussie is still pretty flat. I'm break even on that trade, still looking to build that one up. And Euro New Zealand. So if I put those back on, let me add a couple more here. I still like Euro Aussie long. I still like Euro New Zealand long. Okay. I'm exposed in all these trades. I have positions in. I'm building a position on dollar CAD. I'm building positions on Euro CAD. CAD Swiss I took a short last week. CAD Yen I took a short last week. Euro Aussie or New Zealand I'm building positions on those. Okay. I can't see my screen. Who's saying they can't see my screen? Is everybody clear? I've got the currency strength up right now. Here are my charts, so we can take a look at those. I was just on the currency strength chart. We should be able to see it, right? Let me make sure we're still streaming everything good. Yes. Okay. Okay. I was just on the currency strength chart. I didn't go to a chart. Everybody good? Okay. All right. So let's take a look at those, right? So dollar CAD, one of my favorites. And I'll wrap this up in just about 5 minutes. Okay. So dollar CAD. All we really need to see, again, take a look at my Keep It Seriously Simple video series, the trend line video. This is a perfect example. We're coming off a low. We have a recent high. The question is, can we break this recent trend line? So I do have some positions in. I've leveled myself in at lows, leveled myself in at lows. I will level myself in at lows. I'll keep buying these lows. I'll keep following the structure. But I'm looking to add to my winning positions once we break this trend line. That's an important level. Once we break this trend line, I think at a minimum we head back up to this high, which is around 2,900. But my sights are set on 1.30. My sights are set on this yearly pivot around 33.50. And also I'm looking for oil to cooperate to the downside, even though oil stays somewhat resilient going into summer, but again, it depends. Like technically oil's totally overdue for more downside towards like $52. Okay, so do I think dollar CAD has to require some dollar movement and oil movement? Yes, it's going to factor into that overall. The easy way to watch the dollar CAD is if we break this trend line, if we keep pushing lower, just stay patient. If we break the trend line, start looking to position. And target 1 is 2,900, target 2 is 3,000, target 3 is let this puppy, let this bad boy run to a 33.50. But that trend line break is going to be really key on the dollar CAD. Okay, dollar Swiss. Dollar Swiss is pulling back. This actually is good. I hope it pulls back and does something like this. We have this massive rally up here. We got paid a ton of pips and a ton of profit on that run. We waited for a long time. I'm not going to lie. We waited like 6 or 8 months to get this one to play out, but it was beautiful. Now, if it pulls back, hopefully it pulls back towards our weekly and monthly pivot cluster. All right. Hopefully it pulls back into past resistance, past support levels. I would love it to pull back in to challenge this area around 9,200, 9,250. If it does, a couple ways I'm going to look to play this. One is we either take a very small trade in here, and this may set up for a bit of a correction, and then we take another trade over here. So, and maybe you don't want to play that. Maybe you don't want to take this chance in case it's going to go lower, and you can start trading in here, right? If you have this big swing, this is kind of a nice little wave structure. If we have this swing from low to high, and then we have a corrective wave, so we have this X, A, B, C, D. A lot of times this will set up some type of harmonic pattern. I can draw this better with some straight lines. So we have X. If we have A, B, C, D, like that. That could be a harmonic pattern. Where if you're patient, rather than getting the buy right here and tempted to buy here, which I'm kind of tempted to do, you would wait for this to follow through and you'd start buying it in this area. Right, so you look at 9,000 to 9,100. This would be your buy zone over here, and try to take this much higher. I don't know if we're going to get that. Okay, I don't know why you can't see my charts. I'm watching my own charts on YouTube right now. I'm watching the stream live, so if you need to refresh and check it out, that's really strange. My stream is still live. My recording is still going strong. Okay, just want to check. I'm watching myself on YouTube, so we should be good on the feed. So I'm on dollar Swiss. Okay, I can see myself drawn on the charts as well. Okay, can see, I'm good. Okay, so if you have to just jump out of the channel, come back in, we should be good on that refresh. All right, just want to make sure. Yeah, I'm watching myself live, so I know we're streaming. All right, anything on dollar Swiss, we're good? So if it does pull back, anybody that's interested in a short-term opportunity, selling these highs, targeting these recent pivots, it's just a little corrective phase. But I don't want to be holding short. I don't want to get stuck in a short position because we might see this pull back a little bit and then head higher. Q is crossing 325.09. It is 9:30, so Wall Street's open. Those gaps are official. Pre-market moves are higher. So we're looking at SPY higher, Q's higher, Diamond's higher. Right? Risk appetite. We're going to see some risk on flows today. Let's see if the currency market wants to get excited. All right, let's keep moving with a couple of currency pairs. We did dollar CAD, we did dollar Swiss. I'm going to do just a couple more. I want to keep this session short and sweet. Plus, I have to meet with Tyson around 9:40, so he and I can get prepped and ready to rock and roll for our 10 o'clock Equities On Demand. What was I going to talk about? I like the CAD Swiss. Okay, CAD Swiss I shorted at 9,480. Lovely little April pivot right there, around 73 and change. So if it challenges this low, if it comes back and finds that blue line, which is my monthly target, monthly pivot, I'm going to take some profit right there on that 7,480 sell trade. So again, conservatively speaking, if it comes down to find the pivot, I'm going to take some profit there on that CAD Swiss sell trade. We should also have a chance to short the CAD Yen. Same thing. Okay. CAD Yen is at 8,809. We have a weekly pivot, a monthly pivot. We have a weekly pivot. We have a monthly pivot. Even if it finds this recent low, even if we come back in and challenge this area, I'm looking for some type of corrective phase. Now, we did end up scoring a point for those bulls. Watch this. Okay, you'll see me use the same indicators. We score a point for those bulls. We breach those highs, but we do it with disagreement. We do it with hidden bearish divergence with relative strength in the overbought zone. So we're overbought, disagreement between price momentum. Technically speaking, the CAD yen should find a way to drop. Now, I can't promise that this is going to be the high, right? But with reasonable probabilities, I'm looking for this to find a pivot, a previous low, and hopefully have some type of corrective phase this way. After, again, a long move to the upside, we're looking for a little corrective swing back down. That's CAD yen. So I do like that trade. Okay, Aussie yen, similar. Okay, wondering if we will end up seeing some indecision here that heads lower, or will we end up coming back up and testing the highs and having some type of challenging, hit the highs here and then sell back off and just trade some of this volatility. That's an opportunity as well. So I will be watching the structure really closely. Let's get into some of those CAD crosses. Euro CAD. Okay, Euro CAD's at 4769. Look at our pivots. Okay, weekly pivot. Monthly, actually this one's hit, never mind. We have a weekly pivot here. We have a weekly pivot that was tapped right there. We have a new monthly pivot for April, right around 49.50. We have some pockets. I love to see these pocket trades right around 1.50, 1.5150. This is my money zone for the Euro CAD. So, higher volatility in this pair. We have some new lows. You're going to see this disagreement. Check it out. Okay, you can see that we have a low in price, okay, but we're disagreeing with momentum. That's fine. I'm looking for some hidden bullish divergence or some oversold conditions. If we're not quite there yet, maybe looking for an aggressive trend line this week. Something like this, right? Looking for an aggressive trend line this week. If it does push a little bit lower, stay patient, look for a trend line break, and see if we can make a run back to that monthly. Now, again, monthly pivot, monthly targets. That means we have the whole month, right? We have the whole month. It is April 5th. So we could still see price going lower on the EuroCAD, but making a charge towards the end of the month to find that pivot. That's why they're there. Okay, so it certainly can be a target. It can be where price ultimately comes back to it. Maybe it's this month. Maybe it's early May. We'll find out. But I still like the trade, especially how oversold it's getting, especially how fast it's been dropping. And we're coming back into some really nice buy levels. So some past pockets, some past buy levels over here. I'm looking to buy this EuroCAD. Let's go Euro Aussie and Euro New Zealand. I'll wrap it up. Okay, Euro Aussie. We have been patiently waiting for a trendline break. We finally have it. I am looking to see how this behaves on the right-hand side of the trend line. Watch this low, right? We might see that this is a little move to the upside. It's been all sideways. So we're dealing with some indecision right now, okay? But on the right side of this trend line, I would like to see this right side of the trend line still go higher. So let's see if we can use this structure. Let's see if we can use these lows to hold support, get back to the highs. If we break above this little box I have, if we break above this box, looking for this to head higher, right? Past support over in this area around 1.60. We're currently trading at 54.27. So we have over 500 pips on the Euro Aussie if we have a decent push to the upside. Is it going to take some, Aussie weakness? Sure, a lot of it. Okay, and in fact, what else can we have? We have this really nice yearly pivot way up here at 1.7. So even if we start building off of these lows and price wants to come back to 1.60, excellent. If price wants to go any further to the upside towards this high, it doesn't have to get to the yearly pivot for me. But as long as we make a run towards it, I'm happy with that overall direction, especially on the right-hand side of the trend line. Okay, lastly, Euro New Zealand, same thing here. We broke the trend line. Okay, so we've been waiting. We had this move to the upside, little pause, another break to the upside, another pause. I'm looking to see, can we break this trend line? I'll go into a smaller time frame. Can we break and push back up again? Past support becomes resistance around 1.72. Okay, we have some big harmonic patterns. Again, yearly pivot way the heck up here at 1.78, 1.7860. So if we can build a pattern here, and we'll see what it does. Maybe it comes back down into this level, tests, pushes back up to the highs, and looking to take some profit. Okay, maybe it's a slow kind of corrective phase to the upside until we find this area, and then it pushes down again. We'll see it. But if we're in profit, we're going to protect those profits. Okay, so those are my favorites for this week. Any questions? All good, all good, yes? Okay, pound yen. If someone wants to see pound yen, sure, pound yen. Okay, pound yen is at 153. Let's take a look at my indicators, right? Simple indicators, momentum oscillator and relative strength. Nothing fancy, but good indication of what we can kind of get ready to trade and anticipate. We have seen the pound yen make a high and another high. It is doing so with disagreement. It's also doing so with hidden bearish divergence and overbought conditions. I can't promise it's going to top out right now, but I'd say within reason. Within reason, we don't have that much further to drift. If we go up to this 18127, that might be our overstretch move, hidden resistance, and we start to fall back into this 151 level. So I'm still holding short on pound yen. I certainly wish it was cooperating a little bit more. I'm basically looking to draw a more aggressive trend line. Let's go into a smaller time frame here. Oops, don't do that. There we go. I will be looking for something like this. We have some fresh pivots. You can see here. Last week's pivot still available, this week's pivot available, and this fresh monthly pivot available. So don't force any trades, but if this structure breaks here, let's say it just drifts a little bit higher, okay, fine. But if we get some indecision, if we break the trend line, I'm looking for this to fall back down and find some of these pivots and targets. All right. So again, I'm looking at the bigger time frames for some of these alignments with divergence, overbought, oversold conditions, and it requires some patience. Maybe it's something that we have to just suck it up and deal with it until the latter half of the month. Maybe it's going to be risk on right away. Maybe it kicks, right off the new highs. Or if we have gap in the stock market, maybe our first action is market wants to have a little scare and fill the gap, And if the markets get scared, if the markets fill the gap, we'll see the stock market drop. We'll see the Japanese yen get stronger. We'll see the volatility index make a jump to the upside. So again, I've talked about this all year. It is cautiously bullish. It is drifting higher. Stay with the short-term direction, right? Corrections are near. Corrections are coming. But again, you don't want to fight the overall stock market. And we're seeing that play out a little bit, like the Aussies overstretched and overextended on a lot of currency pairs. The JPY is overstretched and overextended a lot of currency pairs. So again, in the Forex market, technicals tend to win. Technicals tend to play out. Just trade small, trade responsibly, trade conservatively, and don't trade everything. Like don't trade the entire yen basket, right? Like pick a couple of great ones that are overstretched. I'm in CAD yen. I'm in Aussie yen. I'm in Swiss yen. I think the Swiss yen is probably one of the better ones just because it's safe haven on both of them. But pick your battles, right? Don't trade too big. Lovely. Denise says pound yen 4-hour pocket at 155. Well, that's not good. 155, we don't want it to go up there. But that's also a 18127 extension as well. If you go to the 4-hour chart, like Denise said, there's probably a pocket way back here. That must have been trading a while back then, Denise. Let me go. I could probably spot it on the daily. It's just off of one of those recent highs, right? Yeah, it's going to be somewhere in here on this recent high from 2018. Wow, that's way up there. Okay. So, yeah, very possible. If it's going to drift, it's going to drift. And there's nothing we can do about it. But we can keep our trade sizes small. We can, live the trade another day. We'll deal with it. So we'll talk about a lot this week in the Flex Room. But for the sake of today, stock market's gapping higher. Stock market, Wall Street's upbeat about the job report. I'm going to see where those jobs are coming from. Is it sustainable? Equities on Demand. We're starting this week, Monday through Friday, 10 a.m. every single day. Tyson and myself. We have some active day trading today for our strategy. We have some weekly plays. Really looking for some stock trades and some option plays this week. So looking forward to that. Again, for this video, since I'm recording, I know you're streaming this live. I'm going to post an official recording video for this weekly outlook, and I'll include that link again like I did on Friday last week of the Equities On Demand webinar if you're interested in learning more. I'll also put in a link if you want to come and join us directly. Okay? All right, so keep an eye on those Bitcoin levels or those crypto coin levels. Set the chart alarms above highs and recent lows. Monitor that price. Currency pairs, I have my top 5 or 6 I'm going to focus on this week for my Flex Room. Stocks and options, looking forward to an excellent week and launching officially Equities On Demand, so it's going to be a fun week. Right? Everyone out there, appreciate you coming in, tuning in live. Thanks a lot. Give me a thumbs up, like the video. If you're watching this after the fact, give me a thumbs up, smash the like button. That's awesome. That helps YouTube algorithm and also helps this video make it up through the searches. I'm trying to use some trigger words everybody can find. If anyone's trading stocks, Forex, cryptos, live trading, I'm trying to have traders come and find me. Okay? All right, and remember, on Friday, so Mondays and Fridays officially now, we will be live at 9 a.m., right? 9 a.m. Monday and Friday, so I know that my label is incorrect. I'm going to change that on my little multi-streaming platform. But we'll be live again on Friday. I'll see you this week in Flex. I'll hopefully see all of you this week in Equities On Demand, and I'll include all the information in the description down below in this video. Okay? All right, thanks a lot, traders. See you this week. Take care. Bye.